So there is just a ton of insane stuff that happened to Clover Health stock lately, actually pulling back almost 47% however from the recent gains we've seen about 2 months ago that marked an incredible 224% recovery from the 58% drops we've seen before. And as we are now also sitting above $8 again, what we are going to do today is give you an updated insight into what is happening to Clover Health stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us, but also you. So there is really no excuse for not smashing the subscribe button, it's free, and you can always unsubscribe if you feel so. Alright, so let's start talking about the stock. And in the case of Clover, we're talking about one of the country's, especially amongst investors, most popular Medicare Advantage insurers, with investors drawn to the company primarily because of its proprietary platform, the Clover Assistant, which essentially improves outcomes for its members by using cutting-edge algorithms while simultaneously training its machine learning algorithms with collected data. However, if you look at the massive price jumps at the beginning of the year and in June, you'll notice that there's another key component at play that has nothing to do with fundamentals: retail traders' massive hype. So Clover and most other large meme stocks that have experienced some incredible gains recently had a lot in common, particularly when it came to short interest. In fact, until retail investors realized previous short seller attacks weren't as bad as they seemed, Clover Health was one of the most heavily shorted companies in the market. On sites like Wall Street Bets, the stock quickly became one of the top short squeeze candidates, with a short interest of 36%. And despite pulling back again as a result of the massive gaps in price, the medical insurer continues to grow its business at a rapid pace. But as we are now basically trading at a discount, it might be a perfect opportunity to get back into the stock and profit from the pretty insane growth opportunities we are still facing right now. And as short interest also went back up, another squeeze becomes more and more likely. Now also taking a look at some key numbers which are critical to consider before coming to a prediction at the end. Just in the last year, Clover's assistant penetration among current users was at 56% last year, representing a staggering 43% rise year over year. The company also targets a big group of people in over 100 markets throughout 7 different states in the US, as previously said. And, if we look at the most recent first quarter earnings report, with the next one literally being about to be released in a few days, it also came in ahead of analyst expectations. In fact, the company generated more than $200.3 million in sales during the quarter, up 21% over the previous year. So, with massive predicted member growth and revenue estimates ranging from $810 million to $830 million, the company definitely has a bright future ahead of it. Furthermore, Clover Health stock is still extremely inexpensive, especially given that we've lost nearly 47% of our worth after the second rally. However, unless it can find a way to stay profitable on a consistent basis, it will continue to use its $720 million cash position, which was largely derived from IPO proceeds. Nevertheless, it certainly has a ton of growth potential. And as soon as the company can create more positive net income, more short sellers will begin to cover their holdings, resulting in a better risk-to-reward ratio. Moreover, despite being attacked by bears, Clover Health continues to expand its top line. Its capacity to innovate the insurance technology company model is demonstrated by its strong revenue increase in the first quarter compared to the previous year. And, as short interest rises due to the price currently coming down again, another short squeeze could occur. Longer-term investors, on the other hand, should focus on the company's margins and its ability to chart a course to true profitability. Alright, with that being it for today's video, however, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.